Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk about interest rates and interest rate expectations. We had a few FOMC members that made some interesting statements, and I really think that we're on to something with our interest rate projections that we came out with last week during that FOMC live stream. It looks to me like we're walking back expectations of rate cuts in 2025, and that's exactly what two FOMC members said today, Waller and Kashkari. So actually, Kashkari issued his statements last night, but we're going to go over them anyways. We've got a lot going on in the markets, and if you can really take a good look at what's happening here to U.S. stocks, you can see that you're seeing a lot of those sellers begin to step into the market. Why? Because those interest rate expectations are changing, and they're changing in a big, big way. So let's go ahead and get out to price action. I wanted to go ahead and start off with this triple moving average strategy. I've got a lot of comments from you guys and a lot of great feedback. This is a great example of a trade that was incredibly, I won't say accurate, but just very, very, very strong. Now, you'll notice right there, remember that we're waiting for our 5. This is our 5, 8, and 13. We're waiting for our 5, our red moving average, to cross over our center moving average, which is going to be our 8, and price has to be beneath all 3 moving averages. In this case, we would have needed to be beneath that 13 as well. So right here, you can see the crossover developed. You couldn't really take that trade right there, because the price action is still sort of not beneath all 3 of the moving averages, but right there you could, because you get that firm crossover, bang, you're looking to sell somewhere right on that bar, that price bar there. So you've got the crossover, then you're just waiting for price to get beneath all 3, and then you're selling them and right there. I mean, it was just an absolutely fantastic trade. Just to mark it for you real quick, that would have been your entry point right there. You can see that just a tremendous runner. Right there's your entry, your stop loss. I would have put it right up in there probably. You could have put it there as well, but this is just a massive runner. And right now, the market's absolutely tanking. So if I was a trend trader and I was aggressive here with this E-mini NASDAQ futures, I would want to make sure that I got in and tried to get to the short side of this market. This wouldn't be a bad trade at all either. Pull back right to your 5 EMA. Your 5 EMA, and you've also got 38% retracement somewhere right around 21,098. That's a pretty darn good trade. Now, it looks to me like we're going lower, so if that was going to be your strategy using this 5-minute chart, you're going to have to make sure that you adjust your Fibonacci's as price action goes lower and lower. So I wanted to start off with that triple MA. I think that's a pretty darn good trade if you got it. I mean, that's a great job. The NASDAQ futures, though, the E-mini NASDAQ futures are in a pretty good place to trade. And what I mean is you could go to a 5-minute chart and you could trade that pair, not that pair, but that product right now during that U.S. trading day. The biggest thing you got to do is find out when these things move. Typically, price moves when you have good volume. So I would be looking at something like this for the early U.S. session, potentially maybe even towards the power hour as well, towards the end of the day. You want a hyperactive market with a lot of action, and that'll give you a chance here to make some trades using these EMA strategies. So I want to start off with a triple moving average trade. It was a pretty darn good one. If you wanted to trade right now, I mean, you really could. You could go right here with an order. This would be your sell. You want to sell limit. You want to be right, sort of right there, right up around that 98, somewhere in there. You put that right there and then go ahead and place it, and that would be your sell order. So we sort of shaded entry just a little bit, and is it a great trade? It's definitely following the trend. So I wouldn't have any problem with it. And also, you may get a little bit of convergence right there with that 5 EMA. That could be a pretty good trade. So we're going to watch that closely. We may, in fact, get that pullback sell, but it's going to be probably a little bit risky here, or at least not risky, but our timing is just going to take a little bit of time to set up. Interesting level. Nice 38%. We're definitely trending. So you want to follow the trend right here. You don't necessarily want to buy just yet. It's good to see everybody back in the room. I want to welcome those that have been around for a while and those that are new to the service. Dibble, good to see you, Dibble. Bobby Bob, Mark Corp, guys, welcome. It's been an interesting week so far. We had a pretty good session yesterday. Talked a lot of psychology, and really there wasn't a whole heck of a lot going on. There's a lot more going on now. There's a lot more going on now, and we're going to go ahead and start unpacking some of these ideas, and maybe we'll get that NASDAQ trade right there. In any case, Switch Markets, if you need a place to trade, if you need a broker, go over there, check out Switch. I got a question earlier today, Shane, do they allow copy trading at Switch Markets? And I would say the best thing for you to do is not to take my word for it. Contact Switch Markets and their support team directly. The last thing I want to do is give you guys some misinformation. I'm just not sure. So, T. Marina Tucker, good to see you. Welcome. Let's go ahead and get after it here. Interesting stuff. We saw a real massive shift in our monetary policy expectations since the election. There's no two ways about it. And we're really looking intently at a situation with the Fed where we're not necessarily going to get those rate cuts that we thought we were going to get. Now, it looks like we're pricing in about one more rate cut, quarter-point rate cut this year. But right now, we are seeing a U.S. dollar really trend up towards this year's highs. I mean, this last 2 months has been incredibly bullish for the U.S. dollar. Why is the dollar rising? It's rising because it's starting to sink in that there aren't going to be the rate cuts that we thought. We thought that the inflation situation was relatively tame, meaning it was working down towards our 2% objective, and it just doesn't look like it's going to develop. Now, there's a lot of people saying a lot of things out there, and I think a lot of it is just complete hogwash, to be honest with you. This was Mester. Mester is the FOMC policymaker, sees fewer rate cuts next year after Trump's victory. And right there, this says right there, my own view is that the market is right. They're probably not going to have as many cuts next year as was assumed or expected in September. Now, the reason that's being dubbed why, is because of Trump's victory in the election. They believe that a shift in not necessarily monetary policy, but a shift in fiscal policy from the United States government, spending, things like that, is going to throw a major curveball to the Fed. So markets trimmed their forecast for rate cuts following Trump's election victory last week, with speculation growing around his tariff proposals and implications for the world economy. The first thing that I would say is the tariff thing is getting blown way out of proportion. It really is. Now, a lot of folks are economists. They look at economic theory. They believe in, okay, tariffs here, protectionism here, rate cuts, economic growth. I want to really stress something, though, about the tariff story. Tariffs don't necessarily bring automatic inflation. That's not true. That's a misnomer. And the reason why it's not true is because if goods A goods against B goods, and A good has a tariff on them and B goods don't, you're going to be buying the B good. So it's not necessarily that prices are going to just skyrocket because there's tariffs across the board on everything. No, there's going to be tariffs on some things. That's a guarantee. But will it, in fact, bring inflation up to epic levels? And the answer is no. The answer is no. That's completely theory. So when we see something like Kashkari says Trump tariffs could reheat inflation if they provoke global trade tit for tat. So what that means is, if, in fact, Trump puts tariffs on this group of goods, you're probably going to get retaliatory tariffs, maybe from the EU, maybe from China, and all that's great and all that's fine and dandy. But one thing that we're missing here that nobody's talking about, we've gone down the tariff road before. The first 4 years of the Trump presidency, inflation wasn't a huge deal. It just wasn't. Now, we could argue and say that the deflationary cycle that was brought on by the COVID lockdowns, okay, I'll buy that for $1. I'll say, okay, you're right about that. But even going into the pre-COVID era, really 2016 through 2019, we saw a surprise rate hike. Christmas 2018 crashed the markets on Christmas Eve, but rates were relatively firm and inflation was in check. So, on the one respect, you've got these guys coming out saying, "Oh, the tariffs are going to mess everything up. We've got inflation right where we want it with our rate cuts. We're ready. We're doing well." Are you? We haven't seen inflation come down. So now we're sort of seeing these folks pass the buck to, well, it's probably going to be fiscal policy that's going to drive, and tariffs that are going to drive inflation, when I think we all know that inflation is entrenched. We can't get rid of it. So what do we have to do to really bring down prices? Well, there's a lot of things that are going to happen here. This right here is what the Fed always says. We're going to go ahead and hike rates. We're going to cut rates. Take a look at our expectations here. Right now, we're at 450 to 475. That's our current target rate. It's a 50-50 shot that we get a rate cut in December. So all of that stuff right now is driving the U.S. dollar. We already sort of priced in what we thought was going to be a series of aggressive rate cuts, maybe not this year, but maybe next year. That's not the case anymore. What happens? The dollar's going up. Dollar's gaining strength because you're not going to cut. It's gaining strength against the majors. And what else is happening? U.S. stocks have just gone through the roof since the election of Trump, so have cryptocurrencies. But right now you're seeing a pullback because it's beginning to sink in that monetary policy is going to be a real challenge, that you're going to have a shifting dynamic in the U.S. economy. And quite frankly, a lot of the numbers that we've been told are true. We have real doubts about our employment data now, real doubts. Things are changing. The bull market, I think it's beginning to fizzle out and fade. And I'm not just saying that because we're down a little bit today. I think that you're going to see these markets really start to trend south if, in fact, these tariffs scare the Fed into maybe hiking rates. It's a tough dynamic, guys. This is trading, though. Things are changing. So let's talk about trading it. Right here is your DXY. You're going right up there to the top of this year's range, which is what? Right up around 106.49. I think you could dig in and sell up there right in front of 106.49 and maybe grab a nice short scalp. I fully expect there to be a little bit of compression and some sellers, some heavy sellers right up there to really protect that 106.5 level. If, in fact, we do break out, if we do break out to that 106.49 level, then you're going to see a dollar that maybe just cruising up to 107.50, maybe 108. And those are levels we haven't seen really. That 107.34, that right there is October of 2023, 2023's highs. And then right there, November of 2022, we're starting to get into some rarefied air for the U.S. dollar. And the higher that the dollar goes, remember this, the higher that the dollar goes, the tougher it's going to be on commodity prices and the tougher it's going to be on risk assets. So right now we're seeing a resurgence of the U.S. dollar, and it really has happened in about the last week. So be careful if you're trading against the dollar right now. It is definitely showing some strength. Let's go ahead and dig into a couple of these pairs. I got a question earlier today about the euro, and the question was, Shane, when is the euro going to rebound? And to be real honest with you, I don't know. Right now, the U.S. dollar is trending against all the majors. Now, what we can always find long-term levels to sort of hang our hats on. We can always find that, and that's because of the basic premise that markets do have a memory. They do. So when we're looking at something like this chart here on this Euro-US dollar monthly, the low from April, that's going to be your yearly low. So we're pushing yearly lows right now. That low is a big deal, 106.01, and you see you're getting a nice bounce off that 106 level. If you wanted to buy it right now, you could. Just understand that you're definitely taking a trade that's against the pressure. So right now you've got two bearish months, bearish candles. Personally, I wouldn't have any problem stepping up and buying this thing right now at market. Now, if in fact you do something like that, there's a couple of things that you need to be aware of. Number one, you need to have a stop loss. You need to have a plan for your stop loss. Where would I put it? Well, I'm looking for bidders to protect the 106 level, at least in the short term, maybe for the rest of today. Okay, if that's the case, where should my stop loss be on this trade? Got a couple options right there. You do have a bit of market structure. That low back on October of 2023, that low is at 104.48. You could do that. You could risk something like that. To me, that's way too big. I would be looking to risk maybe 50 pips on something like this. 105.47, that's a pretty good out. If you wanted to be even more aggressive, you could do something like this, 105.71 maybe. And if in fact I was taking this trade, I would say, okay, what do I have to get out of it? Couple of ways to go. You guys know how I feel if you've watched any of my streams over the years. I would be looking for a 1-to-1. So I'd be looking for a bounce, maybe right up there to 39 or something like that. Now, if you wanted to take a counter trend play, I would recommend that you really use the market structure in front of you to identify exactly where you think the market can go. So if you did something like this, that trade would probably be a 1-to-3, a 1-to-2, or a 1-to-3 against the trend. You just have to be very careful. When you take a 1-to-2 or a 1-to-3 against the trend, more likely than not, you're going to run into trouble. You're fighting a trend. I have no problem scalping this zone. If we get a nice little bounce up to maybe 106.30, maybe something like that, maybe even 106.24, that would be good enough for me. I wouldn't be too committed and really waiting to get that great big move, because right now the fundamentals are working against you. If you're betting against the U.S. dollar, the fundamentals are working against you. So I would, if I had my druthers, I would rather be short than long. But this 106 area, we sort of have a reason to believe that we're going to get a bounce here. So we'll see if we do, in fact, get a pop. I think we will. Let's go down to a 4-hour chart now. There is always, there's two ways to trade everything. Essentially, when you're trading Forex, if you're trading, futures, Forex, stocks, whatever, you've got two options at any given moment. You could buy or you could sell. Now, for me, I think that you could probably get away with buying right there. There's our E-mini NASDAQ trade just went. There's your short. Interesting move. You don't want to wait around too long. In fact, this one looks like we're in a little bit of trouble here. Let's just wait a second and see how this plays out. You'll notice that the 38% line really set up nicely with that 5 EMA. So right here, you're sort of in a situation where there's a little bit of heat on, but we got a chance here. Let's go down to a 1-minute chart and just go ahead and have a look at price action and what exactly is happening Right there's your breakout. I wouldn't be around too much longer. I would give it maybe a couple more seconds, but other than that, if you don't get that real swift retracement back beneath that 5 minute to 38%, then you're probably going to get hit right here. So this is a challenge. You'll notice the 1 minute chart actually has you buying this according to our triple EMA strategy. If in fact you were going to trade the strategy on a 1 minute, you probably want to be long rather than short. If you traded it on the 5 minute, you're still short. And this trade right here looks to me like it's going to blow up against us. Really a tough, challenging trade. It wasn't very good at all. We're going to go ahead and flatten this thing here in just a few more seconds. I want to see if we get a little bit of bearish price action. And remember, once again, these are demo dollars. These are demo dollars. This isn't real money. I probably would have been a little bit smaller size trading a 5 minute chart here on a Fibonacci trade like that with the trend. We're going to stick in there for just another minute, but realistically, we're getting hit pretty good. Market's going against us. You definitely don't want to hold these too long. If you hold a trade like this too long, you're going to get hit. We're getting a little bit of pressure right there, but I'm going to go ahead and exit this thing. If we take out that high on that 1 minute bar right around there, I'm getting out because there's no sense sticking around. It looks like to me the tides have turned. Let's give it one more second or two, but it does look to me like you're going to get knocked out right there. One thing you want to do if you're trading a 5 minute chart, very compressed, tight time frames, you want to make sure that you're quick on the trigger, and right there you just got to get out. So remember, these are demo dollars. I don't want anybody sitting there with their account taking those kinds of position sizes, following these trades live. You got to have a little bit more discipline than that, and be sure that if you're going to trade on a 5 minute chart or a 1 minute chart, you're using really a small amount of leverage. You don't, in fact, want to be betting a huge amount of your bankroll there because you can get chewed up very quickly, and it really hasn't proved anything to me yet. We could still go down. Looks to me like we may actually bounce, though. Right here, though, there's a couple things I am watching. I'm watching that 5 minute EMA right there, that 5 EMA over the 8, and once price gets above all 3 EMAs and you get the crossover, that's going to be the buy. That's going to be the buy. Okay, so right here for Euro USD, if in fact you wanted to take the trade, we're getting a little bit of push right here off of this 106 level. I'm a big fan of big round numbers. 106 is a pretty good one, and we saw sort of a test right down there to 105.94 a little bit ago. Looks like this market's basing out. So if you're on a 4-hour chart and you wanted to trade right here with the trend, with the prevailing trend, you would execute a trade like this. Spike high to a spike low. There's your pullback. There's your sell at 106.20. That could be a pretty good level to hit if you wanted to sell. For me, I would rather play the long off of the yearly low, and I think we're in a pretty good position to make a few bucks doing that. Definitely don't want to get overextended on these trades. Always just between 1% to 3% of your account. Right there, I would have needed a big account to be trading that kind of size with a NASDAQ, with an E-mini NASDAQ futures like that at about $6.25 per tick. 4 contracts would be $25 per tick. That's a healthy risk. I don't think that I would be doing that, or at least if I did it, I wouldn't have let it draw against me that much. So remember, if you're going to scalp, you got to be quick. You got to make fast decisions, and you got to get in and you got to get out. Remember, you're going to make a lot of trades. If you're a short-term trader, you're going to make a lot of trades. That means that you have to be aware of your risk at all times. Absolutely at all times. Let's go right here to gold. We've been talking about gold for a long time. Gold is definitely sort of the level that I outlined for you yesterday. Is an absolutely fantastic place for us potentially to get that bid. So we're looking at 2481s, probably about 85s. 2485s would be a pretty good buy. 2600, it's going to be down about $15 from where we're at. $115. I think we're going to have a chance. I think we're going to have a chance to get this trade, and I'm really looking forward to it. I believe that we are going to get it and step up to the plate and knock it out of the park. I think that's the play for us coming our way potentially after tomorrow's CPI number. Remember, Connor's going to have U.S. inflation live. That's going to be CPI, the U.S. CPI numbers. That's a huge number. That's going to be a big-time market mover. That could bring gold off in a big, big way, especially if it's a hot number. We're already thinking that we're not going to get the rate cuts that we thought we were going to get. And if you get another big inflation number, a big one, we might be starting to talk about rate hikes again. There's a lot going on when it comes to policy right now, and all of it really stems from the election. This is a nice pullback, though. So if you wanted to trade right now, I really wouldn't eat your lunch if you wanted to go short. I wouldn't. I'd say, well, if you want to go short, that's fine. Just be aggressive with your stops. Don't wait around and really get burned on a market that may just slingshot back in the other direction, especially with that CPI number coming up. So something like this, Sort of a fascinating market dynamic. There's your highs, 27.10, 27.10.45. That's going to be your spike high. Something like this could work very well. $26.34, somewhere down in there maybe. That's a potential short here. I'm using a daily retracement level. I do like that. I think that area is going to give us a chance to succeed. I don't like it nearly as much as the buy down there. I want to buy gold. I'm still bullish gold, but remember, as that dollar gains puff, as these interest rate expectations shift towards maybe a more hawkish policy, then you're going to be in a situation where the dollar is going to rally, and that's going to hurt gold prices. It's going to hurt crude oil prices as well. I'm going to go to crude oil next because I think it's sort of playing possum with us today, up about 0.5%. I don't see any reason why it should be up at all. We'll talk about that in a minute. In any case, this FedWatch tool, I always like to go out and say, okay, let's go to the furthest one, December 10th, 2025. That's next year. Okay, that would be a year from next month's meeting, and this is what we have. This is sort of a typical bell curve type of formation, but realistically, right now we're here. We're 4.5 to 475. So we believe that essentially most folks believe that maybe we're just coming off another 2. Maybe we're coming off another 2, and that's 2 rate cuts. That is not at all what we were told in September. We thought that we were going to end next year somewhere down around 325 or 350, really a full point, maybe even a full point and a quarter from where we are now. That's not going to happen now. This is setting up for a major bearish year in stocks, and it really has nothing to do with the new administration. We know that the economic numbers have been soft. We also know that there's tariffs coming. There just are. There's going to be tariffs. There's going to be some U.S. protectionism there, and maybe there should be. There's a lot of industries right now that are sort of teeter-totter, and we got to make sure that we want to set the stage for global economic growth. And the best way to do that is to ensure fair trade. A lot of people really believe that tariffs are the way to do that, but I think we're going to find out relatively soon. But right here, this expectations for next year, this is shifted by about 1%, 1.25%. I think there's going to be some trying times ahead. That's for sure. Let's go. Let's see right here. Let's see. We have a question. All right, T Marina. Hey Shane, I'm using the trend trader strategy, the trend rider strategy on the Euro USD. Took a short position, but was a bit confused on when to start looking for the retest after the 12 and 36 crossed and 30 pip minimum hoop. Full disclosure, I'm not an expert on the trend rider strategy. Connor is definitely, he trades the trend rider. He does the live streams on the trend rider. What I would say is just stick to the rules exactly as they're written in those PDFs, and you really can't go wrong. So go check the PDFs out on the video, and it'll give you the exact parameters for executing that trade. Full disclosure, I'm not up on the trend rider. I work on the pendulum. We're going to do some of that stuff as well later this week, but I'm looking at the pendulum and these crossover strategies for right this minute. And Fibonacci's, of course. So a good question. Yeah, absolutely. How to? Let me see, 36. Yeah, so you're going to have to go watch the video, Team Arena, or reach out to Connor Woods and ask him, send him a private message and ask him. He'll be sure to help you. My apologies for not having that answer ready to go for you. All right, let's go to U.S. oil here. I'll sort of give you my opinion on U.S. oil, and that'll probably be a wrap for today. What we really have to be aware of is tomorrow's going to be a huge day for oil. You've got EIA inventories and you've got CPI. You're absolutely welcome, Team Arena. You're going to have big-time market drivers that are going to shake the oil markets up. I expect oil to come off. We've already come off quite a bit. You can see that big downtrend there that we saw yesterday. Well, right now, we're sort of just taking a good look at what we really need to get accomplished with U.S. oil, and that is to make sure that we have sort of a good game plan going into CPI. Now, this is a tough 30-minute chart. This right here, sort of opening bell, 9 a.m. Eastern, big sell-off, and now we're just sort of rotating sideways. In my opinion, I would be looking at my weekly saying, okay, what's going on with my weekly chart here? Where are we at? Now, remember, our monthly key level, I've talked a lot about that, 64, right around 64.50. That is the big level. We're watching that closely. I expect us to head down there and check it out maybe this week. It really depends on what CPI does. Now, as far as trading this right this minute, how would I do it? I'm not really in any hurry to do it. This is really tough market structure. There's a nice big move. There's sort of an inverted doji, or a sort of a hang. I guess that's a hangman coming on from last week, and that's a bearish. I mean, that's sort of an inverted hammer. That is a signal that you're going to see bearish price action, and that's what we've seen this week, off about 3%. So if we're looking at this thinking, okay, how am I going to trade WTI crude? Number one, we're looking to be bidders down here at 64.50. We're looking to bid from that level. That's a huge zone. I fully expect to get some real nice profit target, or some real nice price action there. For the short term, we could go down to a daily, but you're really going to start to see a little bit of discombobulation. I know that's a big word, but it really is a nice big 2-day sell-off, which it was to be expected after sort of the election uncertainty, the triple sort of that triple doji right there. But we're coming down into an area that is very, very important that we understand, and that's October's low. That hammer right there, that doji, and then that inside bar, your lows are right around 66.75. So if you just wanted to be a basic order block trader, somebody that's looking for a natural support level, that's a natural support level right around 66.75. If you do get a shot at that, you probably could bid. It also is going to sort of correspond with that lower Bollinger Band. So there's a lot going on there. I think that you could probably bid from there and be okay, but I fully expect this thing to sell off more. I would be surprised if we don't get a shot at our 64.50 level, and I would much rather bid from down there. Now, as far as selling goes, you can sell. I mean, you certainly can sell. There's no rule against it. You can definitely sell. Just wait for a better trade location. I don't think you want to sell from down here because you really could get chopped up. Sort of what we're seeing today, up about 0.3%. Not necessarily a huge bullish move, but the bearish price action has definitely taken a pause after a big 2-day sell-off. So if we do get a pullback somewhere up in that 69.71 area, you probably could get in there and take a short from right up there. I would much rather short just under 70, somewhere in that zone, than short right now, because we definitely could get chopped up by that friction, and I think that could be a big problem for us if we're short-term trading. All right, let's go back to our NASDAQ and see exactly where we're at. Really a pretty good stop out point. We saw us really rally here. You don't want to go for that ride. Selling right down in here and just get it really blew up in our face for the first 5 minutes. I would be really more inclined to maybe enter the long side of this market if you get that 5 EMA to cross over the center EMA, and price needs to be above all 3 EMAs. So there's our long-term, our 13 period, sort of our anchor point. That's holding on, really sort of showing us that bearish trend is definitely still valid. And then right now, it looks like you're going to get a crossover here. If you're short, you probably just hold shorts. You might be able to move your stop loss right up there, so you take some money off of this trade. But if it does cross up over that 20, you're going to have to wait for the extension to get above all 3 of the moving averages and that bar to close, and then you can go ahead and buy the market there and sort of try to play, potentially try to find a bottom here in the E-mini NASDAQ. All right, everybody, I'm going to go ahead and sign off here for today. Tomorrow's going to be a big one. We've got a different stream schedule. Connor's going to have U.S. inflation live during that CPI release, and then I'm going to come right in there right after he's done for the Wall Street Open. We're going to trade CPI in the fallout. I'll spot some markets that are on the move. We'll go through a few trades. We may even do a little bit of strategy trading as well, where we'll work with that EMA and maybe some RSI confirmation. But other than that, I'm seeing a lot of things happen in the market, and it's bearish, and it all has to do with interest rate expectations shifting. So if you're going to trade against the U.S. dollar today, be very, very careful. Be very careful, because bids are hitting the greenback, and that typically brings risk assets down, and it also brings commodities down as well. All right, everybody, I want to thank you for joining me. Thanks for being here yesterday as well. Great stream yesterday. Got a lot of good feedback. If you have any questions at all, stop by the trading room and ask me. And if I have an answer for you, I'll get back to you. And if not, I'll try to point you in the proper direction. All right, CPI's up next. It's a big number, so be careful with your leverage and your stops. Once again, trade the action well, and we'll talk soon. See you.